Good morning, traders. It's Thursday, January 21st. Taking a look at the charts, we got the SP 500 daily futures chart here on the right. Another up day. Yesterday was a pretty big day, starting to break to the upside to some new highs again. Today we're pushing up even further. You can see here our 30-minute chart, how we get into these lime green, these oversold territories. Also the 20-day moving average where the market just keeps finding support. We had this a few days ago where the market got oversold. We saw some panic spike on our panic indicator. Usually when the market gets oversold and we get one of these spikes, we tend to see the market have a very sharp rebound. So we've had a really nice bounce at this point, and it's continuing to push higher. We'll see how that goes. More or less a strong day yesterday really helped push our band trade, our hail trade up to new highs, all-time highs again. We'll cover that in just a minute, but let's run through some of these other plays. The bond market here real quick. Bonds, they've had this, what looks to be an oversold market condition followed by a knee-jerk reaction bounce where we broke 1, 2 clear pivot highs. It's been consolidating, and now we're looking to see if it's going to go up and test these the 20-day moving average. Overall, it's trying to build a little bit of a base here. Again, the trend is down. All we're looking at really, we're not looking to trade this. We're just expecting it to have some type of relief kind of bounce, a short covering bounce, either to the 20-day or to the 50-day moving average, and we'll see where it goes from there. Ideally, for it to start to become bullish, it needs to get above the 50-day, and really a lot more from there. It's trading, struggling with the 50-day below the 200-day moving average, which you can see up here. Once the 50 days below the 200-day, that's a pretty bad sign. And if price is below the 50-day as well, it's in a pretty strong downtrend. So there's a lot of work to be done before this really changes direction. We want to see the 50-day above the 200-day, and we want to eventually see price get back above it. This could be seen as a really big bull flag. You can see it come up here, and then it's working itself down and kind of working itself out. Eventually, we could see this come out the other side. Obviously, the 200-day would be coming down. The 50-day here would eventually start to slope up. It would kind of give us one of these potential signals again where we could see bonds go, but that could be way down here. The bond market could continue to fade all the way down to this breakout zone, which is a pretty significant level. So there's still quite a bit of room and time here for bonds to mature before it's even going to fall on our radar. We don't want to get long anything. We don't want to get long bonds when they're below the 200-day moving average, when they're below the 50-day. We really need it to be in a strong uptrend for us to get in, which is above the 200-day. All right, so let's take a look over at the dollar ETF. You can see the dollar here has had a bounce. Again, it's moving up to 20, 50-day moving average. It is in a pretty clear downtrend now. Have price under the 50-day, price under the 200-day, and we'll see where this goes. Obviously, if you look at the short-term trend chart, it's been in a red, which means it's been in a downtrend. This is short-term analysis. It looks like it's starting to shift to the upside, and we're going orange. So we might see this continue to push higher. There is potential for it to have a pretty strong rebound all the way back up to 25.40, but again, it'll be some type of short covering rebound. We'll see where that goes, but again, we're not looking to get long anything that's in a bearish trend. As the stage analysis is bearish, the 50 days below the 200-day, and the price is below the 50-day as well. So very bad sign. In general, you get some very strong rallies in bear markets, but again, you never know. The odds are it's going to eventually find resistance. Either it's going to find resistance at the 50-day or this pivot high, or somewhere in this high, or potentially over in these lows here where it also tried to hold before it broke down. So you never know where that is, but the odds are it's still going to go lower until we see this thing really start to drag out where price trades sideways, the 200-day eventually comes down and price can get above it, and the 50-day above it. We need to see a major shift there, but the dollar definitely bearish. If we take a look over at gold, looking at it from the kind of longer standpoint here, you can see gold is at the 200-day moving average here. Everything's trying to consolidate here. Obviously, it's been in a downtrend for several months, so it's definitely out of favor still. It's consolidating a lot like bonds, where we saw a big rally in bonds, consolidation, another huge rally in bonds. We're seeing gold do very much the same thing. So it's holding up better than bonds are. Obviously, price is above the 200-day. The 50 days also above the 200-day, so that is a bullish trend. It's still in a long-term bull market, but we're getting to this apex here. Price could still straggle here for several more months. This is a big pattern. And eventually, hopefully it'll resolve to the upside, but you never know. We'll have to see how things unfold and really kind of take it one bar at a time. Now, if we take a look at silver, silver's up 6% this morning, nothing too significant. Similar type of price action. It's been consolidating. It is pushing up, making some higher highs here, higher lows. So it's holding up much better than gold. And it's above the 200-day as well. But overall, it's in this giant bull flag pattern and just really not all that favorable at the moment to get into a trade. It's had a big drop. It's been consolidating here. This still could very easily have the second big red bar, or it could take a few red bars to get down here. And that'll bring us right down into these support lows, these pivot lows. It'll also bring us to the 20-day moving average, or sorry, the 200-day moving average. So when you look at this pattern here, this looks like a little bear flag. It could very easily break down and flush out and still hold and still be a long-term bullish play. Just short-term, it's not looking good. If we look at gold miners real quick, GDXJ, you can see very similar. It's flagging out. It's flirting with the 200-day. Again, it still has a lot more work to do to get a real bullish bias and to get a short-term signal here. And silver has a stronger chart. It did push up to some multi-year highs, and then it pulled back. Still making a series of higher lows, making a series of higher highs, and it's got more room to the 200-day, but again, it's just not in favor. Short-term analysis, it's gone bearish. Even with yesterday's strong rally, that looks like a short covering type of rally, and it's right into this pivot zone here where it was a significant pivoting gap over here as well. So we'll see how that plays out going forward. If we take a look over at our band list, here is our band list. Hale closed at all-time highs again, continues to muscle its way up. Nice move there yesterday. It did sell off early in the morning. It opened up fairly high, which was nice, and it sold off first thing in the morning, but then it just continued to claw its way back. Money continues to pile in. This blue line here over the volume is the on-balance volume, so it's just constantly getting accumulated, which is what's making it one of the top 3 best assets here. And it's up over 25% since this last trigger, which is where we got in. Again, if the original trigger for this was right here, so it's actually up 48%. We're up 25% on the renewed trigger on this. So huge move for all of these sectors. Now, I talked about this yesterday in the video about TAN. TAN's got 0-0. So if we take a look at 0-0, that means it hasn't had a trigger. It's reset its trigger. Every time we get a red box on the top of this chart, or you see 0-0s, it just means it's reset. It means it's had a rally, and then it's consolidating, and more or less it's lost its upward, that high momentum move, and we're waiting for a green box to give us that new trigger saying, hey, it's flipped and it's ready to run for another move. TAN has moved pretty significantly. The most recent reset trigger the day after, it ran up 34%, still up 25%, just like the TAN play. Originally from the original trigger here, it ran up 60%, still up around 48%. So pretty powerful moves. And right now we've had this 0-0, this reset. So we're waiting for this momentum here. All it is a bull flag. A bull flag is when it's a big enough bull flag, it loses enough momentum. The market resets, and our system's looking for a fresh new trigger that it's going to give us a green box. And when we get a new trigger, it's going to say new in purple here. And then, of course, the following trading session at the opening bell is when that trigger entry can be taken. So we're waiting for a reset. It looks like a nice bull flag. It's had a nice complex retracement in A, B, C. I talked about this a few times already. When you have an ABC where you break a previous little low here, that's what triggers a lot of short-term traders stops, and it runs them out of the market. And then that's usually when the market puts in a bottom. So it's nice to have an ABC where you have a lower low, especially when it comes into a moving average. You can see the volume down here. You can see how it spiked up on that red bar. that's a sign that stops got run, and then the market reverses without you. It happened over here as well. We had an A, B, C. It just broke these lows by a little bit. There was a spike in volume where stops got run, and then the market goes and takes off in price. So we're looking for this to reset here and potentially move higher and give us a green bar potentially any day, and it could start another significant run to the upside. What else here? Let's take a look over at PBW. Where's that? That continues to consolidate. It's in a consolidation here as well, looking like it's primed and ready to continue to pop. If we look at MJ, up over 21%. It's a pretty quick move here. Gave us a signal, really popping, consolidating a couple days. It's holding above this 5-day moving average. We'll see if it can, if it's going to consolidate deeper here and reset. It's had a 20% run, and you're going to notice our targets for band are usually they're always 7, 15, and 20. But what we're looking at in these markets is we tend to see markets move, these top leaders, they usually move 7, 15, or 20%, and then a lot of times we get red boxes and they reset. So whenever we hit these 20% levels, 25% levels, typically that's kind of what a natural push is, when a new signal in these. That's kind of like the max out. Sometimes they go a lot further, but we're trying to scale out where the market's most likely to start to roll over and protect our positions by trimming off profits. If it keeps going, well, we still have a portion of it, but if it rolls over, we're not giving back a bunch of those gains with a large portion of the account. So we'll see how things unfold. You can see there's a lot of gains here, a lot of triggers in the last 8, 9 trading days. Most of them, I think they're all up. They all are positive, so they've all been working out pretty well so far. And we'll just continue to let this market unfold. Again, we're going to be looking for the stock market to have a reset. So this green and red line on the bottom here, this is when the market, when it's green, it's favorable to be in momentum stocks. We're playing the band list triggers. The top 10 is the focus. When it goes red, that's when we're out of stocks. We do not want to be owning any sectors or any stocks when it's red. And then when it turns back to green, that's when we get an initial new buy signal. So for example, instead of just playing these new green triggers that happen, we're waiting for these major signals, and then you can see the type of gains. A lot of these gains recently are all 50, 60%, 48 to 60% from the last trigger. So we are waiting for the next red bar section to get us into a new batch of 3 trades. Until then, we can continue to play and navigate these new triggers as they come up. The SPY actually had a trigger yesterday. Now it's not the top performing index. The IWM is the Russell 2000. NASDAQ's just below it. And then SPY just gave a signal there yesterday. So it is breaking out to new highs and has another momentum push. You can see the last one here when it pushed. It had a nice little rally to the upside. So we are seeing these triggers start to pop and trigger. And if that's the case, if the stock market's going to keep going higher, it's going to definitely push hail, likely quite a bit higher as well. Now the technology sector yesterday also pushing nice and high, pushing up to some new highs here. It had a new trigger. But again, it's pretty low on the list. It has really been dormant and chopping around with a lot of noise. It does look good, but again, it is a bottom performer. It's going to probably be a fairly slow mover compared to these, some of these like innovation, autonomous vehicles, internet. These are all subsectors more or less within the tech sector. So instead of playing the big, slow-moving tech sector where there's some good tech and bad tech moves, you can just focus on these, high explosive technology plays. So if the tech sector's got a good buy, we could actually end up seeing some of these other tech plays really take off. You can see up here 41% on the autonomous vehicle, which this is pretty much very similar and same to Hail. It's autonomous vehicle. Hail is a smart mobility. They're slightly different. One's got more robotics in it. But amazing, some of these sectors and these tech sectors are really starting to pop. Anyways, that's it for this morning. Talk to you in a little bit. Bye-bye.